Hello, my name is Fatima Iqbal and I'm with Azzad Asset Management. We're here today with Ihab Salib, the lead portfolio manager for the Azzad Wise Capital Fund. Today we're here with Ihab at the headquarters of Federated in Pittsburgh, Pennsylvania. Thank you, Ihab, for having us.
Thank you.
So Ihab, today we're just going to go over a few questions that investors might be interested in hearing about the Wise Capital Fund, about how the fixed income markets have done over the past quarter. So to get us started, can you give us an idea about the quarter that just concluded?
Sure. This was a pretty volatile quarter for all asset classes, including fixed income. So, for example, you had non-U.S. equities down 5%. You have EM equities down maybe 4%. You had commodities down 10%. A variety of emerging market indices also down anywhere between 2 to 4%. So overall, fairly volatile, and for a variety of different reasons, which we can get into. But it has not been an easy quarter.
Fair enough to say that. What about the Azzad Wise Capital Fund? How would you say it performed in these market conditions?
It actually performed quite well. Surprisingly, we're actually up on the quarter slightly. We're up about 15-20 basis points on the quarter. So we were able to withstand that volatility, I think very, very well. So we had the fund diversified between bank deposits, Islamic bank deposits, Sukuk, and as well as some cash exposure and a small exposure to equities. So that the diversification altogether tended to work very well. And again, the fund had a positive return for the quarter.
All right. Volatility definitely has taken over the headlines recently. How is this fund designed to achieve capital preservation and income while staying away from interest-based products?
That's really our primary goal. Our primary goal is capital preservation. So we want to earn a reasonable return on the fund without too much volatility, without too much down risk in the fund. And we do that in a variety of ways. Number one, we stay in higher quality holdings, so things that don't have too much credit risk. Investment grade, for example, that's the majority of the fund. Number two, the current strategy is focusing on short-dated instruments, meaning instruments that will not have a lot of sensitivity or less sensitivity to interest rates. So if there's higher interest rates, it wouldn't hurt the fund as much. And the third way, by having a diversified portfolio, again, between bank deposits, Sukuk, and a little bit of equities, and some cash, when we think that cash actually reduces the volatility in times of volatile environment like we just had.
Okay. So you mentioned Sukuk as one holding in the fund. Now we're expected to see interest rates starting to creep up. So what is being done to make sure that the investors of the Azzad Wise Capital Fund are somewhat protected from that interest rate risk?
Sure, that's the biggest risk really for any fixed income instrument for the coming years. When will the Fed raise interest rates, and how will that affect all bonds, whether they're Sukuk or non-Sukuk? We're doing two things. Number one, we are keeping our exposure in shorted dated Sukuks, meaning less maturity.
Okay.
That's helping quite a bit. And the second item that we're looking at that hopefully we'll be able to implement before the end of the year is the use of profit rate swaps.
Okay.
And profit rate swaps really help you manage your interest rate risk. So you're able to earn your spread, the extra premium you get from holding the Sukuk, but with a less volatility due to rising interest rates in the U.S.
Okay. Okay. So the addition of the profit rate swaps then would hopefully help in reducing some of the volatility.
Absolutely. It will reduce the volatility. It will also give us the ability to buy longer dated Sukuk,
okay,
which might have better returns, but overall, without taking that extra interest rate risk.
Okay. So
that's one thing we're doing. The other thing we're doing is we're looking to expand our holdings in areas which we haven't been before. That tends to be on the trade finance side. This is Islamic trade finance, Murabaha transactions. Okay. Those transactions offer very, very good return. They tend to be much less volatile. They tend to behave kind of like cash in a way, but they actually earn you quite reasonable returns, higher than bank deposits and definitely higher than cash.
Okay. Going back to interest rate risk and sukuk, what is the outlook for the sukuk market? We've seen there be less sukuk issuances, and do we expect that sukuk will behave any differently than conventional bonds in changing interest rate environment?
Sure. So from an issuance perspective, you're right. It's been kind of a dry year. We haven't had as much issuance as we'd have liked to have overall. There was much more demand than supply, actually. However, what you started to see some non-conventional issuers, meaning issuers that haven't issued in the past. The UK government, for example, the South African government, the Hong Kong government. You had issuance out of Goldman Sachs, for example. So non-conventional issuers to the asset class, which is adding to the breadth and depth of the asset class. We think that will continue because I think a lot of those issuers are seeing the demand that's out there for that type of asset. I mean, we're probably going to have somewhere around 2 trillion of Islamic-based investor base by 2016. That's a lot of demand that needs to be covered somehow. So yes, it's been a slow year for issuance, but we think that's going to expand in the next 1 or 2 years. And from a perspective of how the asset class can handle volatility, we actually just had a perfect example in the last 3 months. So in the last 3 months, you had emerging market bonds, for example, which a lot of these sukuks tend to be in that world, go down 2, 3, 4%. Sukuk bonds actually performed very well. Some of the sukuk holdings we own, for example, were actually up on the quarter, 2, 2.5%, 1.5%. And the reason behind that is that the traditional sukuk investors tend to be a much more buy and hold type of investor. They're not in that asset class to make a quick dollar and come back out. They need these assets. They know how difficult it is to get their hands on them because there's not that much issuance. So when they buy it, they hold on to it. They're not afraid of some market volatility that happens. So in an environment like we just had, where many other assets sold off, the sukuk holding actually were a very, very stable part of the portfolio.
We'd like to thank Ihab at Federated for joining us today to talk about the Azzad Wise Capital Fund. Please make sure you check out this video and others at the Azzad Funds YouTube channel. I'm Fatima Iqbal for Azzad Asset Management. Thank you for watching.